All right, gang. So I hope that helps, gang. Just trying to, get y'all as much information as I can, gang, when I can do it, Um, I got you, gang. So remember, just when you see a yellow candlestick, bullish, you see bullish momentum right here. This is a lot of momentum. You kind of zoom in, you see more of what's going on. See this yellow candlestick break above this blue line. Once you see price break above this blue line, we're in an uptrend. Pay attention to the candlesticks. Made a hammer pattern. This is extremely important at our psychological levels. Your psychological levels are extremely important. 1950, 1900. These are psychological levels that price likes to go to a few times before, and will go to these levels over and over and over again. So you have to have your psychological levels on there. Mine is every 50. So, goes to our psychological level, 1950, and what does this price do? It heads back down to 0.786, right after going to our psychological level, 1950, exactly. And then heads back down to 0.786 Fibonacci and start retesting at here, heading back up, making a higher high, making a higher low, and making this double bottom pattern, making this W formation, double bottom pattern, go up, head back down, go up, head back down, go up, making this double U formation. So head it back down, it go back up, head back down one more time, and then go back up, creating this, making what structure, higher highs and higher lows, higher highs and higher lows, and eventually a higher high all the way up to 1965 before making a higher low back down to zero point 0.5 Fibonacci, and then making a higher high back up to 0.382 Fibonacci. We do see price, going higher than that, or at least the 27 extension, 2016. So pay attention. Like I said, when candlesticks break above, you pick after price, goes up 50 pips like this, and you could have rolled this from March 16th all the way up to March 17th. Price will do this in like 1 or 2 days. Like it'll do it fast with gold, especially with gold. It'll go up to 50 pips, 100 pips in like 2 days, 3 days, maybe one day. Sometimes even overnight, it will just do it. Like this market can do whatever it wants, gang. So it'll get up here very, very fast and it go right to 1950 or psychological level, and it happened in one day. From March 16th to March 17th in one day. And then to get back up here, it did from March 17th, 2022. It did to March 18th. It did take about like two, 2 days, 3, 4, like 4 days, 4 or 5 days to get back up here from March March 17th, all the way back up to this 50 level, 1950. It took about 4 or 5 days to get back up there. It took about 4 or 5 days to get back up here. Sometimes it'll just take a day from March 17th, March 16th to March 17th, 2022. It took one day. So sometimes, like I said, gang, it won't, it won't get up back up there in just 1 or 2 days. Take 3, 4 days sometimes to get back up to 1950. So it did do that. See price, made a higher low back down here. See consolidation. You don't trade when price is consolidating, and you see the moving average. It's not really doing nothing. It's just moving sideways right here. This lets us know that it's still making structure. You can see higher lows and higher highs and higher lows on the moving average, but it's just moving sideways. So when it's moving sideways like this is really all consolidation. You see consolidation here, even here a little bit here with consolidating a little bit here on the 4 hour before breaking through, consolidating again. Like when you see a lot of consolidation, this is all really consolidation right here. You can see that the moving average is just moving sideways. When you really look at it, it's just moving sideways. This is a sideways trend. This is also known as consolidation when price is moving sideways. That means that you don't trade when price is moving sideways. You can get stopped out a lot, lose your money. You don't trade when price is consolidating. After price goes up 50 pips, from 1900 all the way up to 1950, which is 50 pips, price will consolidate. And it consolidated from March 17, 2022, for about 3 or 4 or 5 days. It was consolidating before we finally see March 23rd, 2022, price started heading back up, breaking above this moving average breaking above this moving average with the yellow candlestick, 4-hour candlestick, breaking above it. And then you see price, make a higher low back down, making this hammer pattern on March 23rd, 2022. Like, pay attention to the candlestick patterns. It makes yellow candlesticks let us know that buyers are in complete control. We see this candlestick break above this moving average. We see another hammer, another yellow candlestick. Like, you could have got in for an entry at any of these times right here, 1927, 1930. As price goes above this moving average, you could have rolled this from 1927. Even, if you didn't get in when price, broke at 1917, start pushing back up. If you didn't get in at that time, you could have waited for price to break above this moving average, this blue line, and then you could have got in at 1928 and rolled this all the way up to 1965. Like, gang, like, you could have did that. Definitely could have waited for price to break above this moving average. Wait for price to break above this moving average. Pay attention to candlesticks. Like, this is a yellow candlestick, letting us know that buyers are in complete control. Breaks this trend line right here. Breaks this trend line right here that we had going on. Boom, breaks above that even as well. And you could have got in around 1930 for an entry. For like an entry for like a long position. And you could have got in anywhere around here for like a buy. Like 1925. Soon as the price breaks above this box, this consolidation, you could have got in. So at 1925, you could have got in, or you could have waited for price to. If you want to be a little more conservative, you could have waited for price to break above this moving average, this line right here, this moving average. You could have waited for price to break above this moving average line. It will let you know once you see price break above this moving average line. This is pretty this is like it's pretty like accurate. When price breaks above a moving average line, candlesticks break above a moving average line, we are in an uptrend. And you could have rolled this all the way up to 1965. Risk reward ratio 1.93. Here's your stop losses right here. If you wanted to make your stop loss a little closer, obviously, you could get a better risk reward ratio. 0.3 0.375 risk reward ratio. If you would have got in around 1932, once price breaks it, this makes it yellow candlestick right here, tries to break above, it's consolidating at 0.786 Fibonacci level. You see consolidation here. Once price breaks above this moving average line, and then you see prices at 0.618. Next Fibonacci level is 0.618. 0.5, 0.320, 0, and eventually price goes to 27 extension. It'll go from Fibonacci level to Fibonacci level. It'll go from 0.786 Fibonacci level to 0.618 Fibonacci to 0.5, 0.382, all the way up to next to 0, and then 27 extension. So, once price did break above this moving average line, this blue line right here, making this yellow candlestick, it makes a hammer here too, lets us know that buyers are in complete control. And you could have just rolled it from 1932 once you've seen price break above this blue line, breaks out of consolidation, goes to 0.618, it starts to head 0.5, and then eventually 0.382. It'll go from Fibonacci level to Fibonacci level. So it'll go from 0.786 to 0.618, 0.5, 0.382, next is 0, and then 27 extension. And eventually all the way up here, we got 0.618 Fibonacci. Price will go there as well. Just back out some. So we have our 0.618 Fibonacci. So right now, you could have got in for an entry around here. And this is a 0.75 risk reward ratio. And, makes a double bottom pattern. And we're waiting for price to go to 27 extension. And then eventually back up to 2050, 0.618 Fibonacci. And this is how I looked at it, gang. This is exactly how I would have looked at this. So I hope this helps, gang. Price will make a double bottom pattern. It won't just go up and then it'll go down and then go up and keep going up. It'll go down one more time, creating a double bottom pattern and consolidating at 0.786 Fibonacci before breaking above 0.618 Fibonacci, breaking out this consolidation box, breaking above the moving average, going to 0.5 Fibonacci, and then eventually 0.382, or if the price to go to 0, 21.7, and then maybe 0.618.